Have you ever wondered whether tech giants like Google and Facebook pay tax in Nigeria? Well, the answer is yes, they do. Check this out. But one question is, how do these multinational tech companies navigate the intricate landscape of digital taxation in Nigeria? That's what we will be delving into in this series on digital taxation compliance strategies for multinational tech companies in Nigeria. But in this video, we will be discussing the implication of digital taxation regulations in Nigeria using multinational tech companies like Google, Amazon, and Facebook as case studies. Hi, my name is Olatunji Abdulrazak. I am the founder and CEO of taxmobile.online. Welcome to my YouTube channel, A Stitch in Tax Saves Cash. This channel is dedicated to helping you stay on top of your taxes. We will provide you with tips and strategies to help you keep more money in your pockets and minimize your tax liability while you stay in compliance with tax laws. So, if you want to start taking control of your finances from today, hit the subscribe button below and click the notification bells to stay updated on our latest videos. Firstly, what is digital taxation? It refers to the taxation of digital services, transactions, and activities conducted by multinational companies in various jurisdictions. In essence, digital taxation is a framework aimed at taxing the revenue generated by multinational corporations through digital channels such as online sales, advertising, and data transmission. As the digital economy continues to grow, tax authorities are adapting their regulations to ensure that these companies contribute their fair share to the countries where they operate. In Nigeria, the introduction of the Companies Income Tax Order, Significant Economic Presence 2020 has significant implications for tech giants operating in the country. The order outlines specific criteria for determining when a foreign entity has created a significant economic presence in Nigeria, therefore making them liable to taxation. These criteria include deriving income of 25 million or its equivalent in other currencies from Nigeria in a year, using a Nigerian domain name .ng or registering a website address in Nigeria, and engaging in purposeful and sustained interaction with Nigerian individuals by customizing digital platforms to target the local market. For multinational tech companies like Google, whose services encompass search, advertising, and cloud computing tailored to the Nigerian market, meeting these criteria would result in the need to reassess their tax liabilities in Nigeria. Calculation of income from Nigeria would include revenue derived from activities such as streaming or downloading digital content, transmitting data collected from users in Nigeria, providing goods or services directly or through digital platforms, and offering intermediation services that connect suppliers and customers in Nigeria. As for services offered by foreign entities, such as technical, professional, management, or consultancy services, if these services generate income from Nigerian residents, fixed bases, or agents of foreign entities in Nigeria, this would also trigger the creation of a significant economic presence in the country. However, exemptions are granted for payment to employees of foreign entities or for teaching services in educational institutions. To effectively navigate the digital tax landscape in Nigeria, tech giants must engage with tax experts and legal advisors to ensure compliance with the Companies Income Tax SEP Order 2020. This may involve conducting internal audits of their Nigerian operations, revising tax strategies to reflect the new regulatory requirements, and establishing transparent communication channels with Nigerian tax authorities to address any questions or concerns regarding their tax obligations. By doing so, they fulfill their tax obligations, uphold their corporate responsibilities, and continue to make meaningful contributions to Nigeria's digital economy. Now, let's dive into the detailed explanation of the criteria with relevant case studies. Deriving income from Nigeria. One of the criteria is deriving income of 25 million or its equivalent in other currencies from business activities conducted within the country. This criterion aims to capture foreign entities that generate significant revenue from Nigerian markets. Take Amazon, for instance, a multinational e-commerce company that operates in Nigeria through its online retail platform. If Amazon sales revenue from Nigerian customers exceed the 25 million threshold, it falls within the criteria outlined in the company's income tax SEP order, making it liable for taxation. Using a Nigerian domain name or website address. Another criterion is the use of a Nigerian domain name .ng or registering a website address within the country. This condition targets foreign entities that establish a direct online presence catering to the Nigerian market. Considering Netflix, a leading global streaming service provider that caters to Nigerian viewers with subscription-based content, if Netflix chooses to operate a website with .ng domain or register a distinct Nigerian website address for its services within the country, then it would meet the criterion and fall under the purview of Nigerian tax regulations. Purposeful and sustained interactions with Nigerian person. The order also considers foreign entities that engage in purposeful and sustained interaction with individuals in Nigeria through customization of their digital platforms. This includes activities like pricing products or services in the local currency, Naira, to target the Nigerian market. For instance, Facebook, a leading social media platform, if Facebook tailors its advertising services specifically for the Nigerian market, such as offering ad placement in Naira, it would fulfill this criterion and be subject to the tax implication outlined in the company's income tax order, thereby subjecting it to the associated tax implication. Now, let us examine the specific implication for this tech giant. Given the expansive digital presence of tech giants like Amazon, Netflix, Facebook, Twitter, and Google in Nigeria, coupled with their significant engagement with Nigerian users and the substantial revenue they generate from the market, compliance with the SEP criteria is imperative. This entails a thorough evaluation of the operations and financial structure in relation to Nigeria to ensure adherence to tax obligations. Case studies. Google's diverse array of services ranging from search to advertising and cloud computing has firmly entrenched the company within Nigerian digital landscape. By tailoring its platform to meet the needs of Nigerian users and capitalizing on localized content and targeting advertising, Google garners substantial revenue from the Nigerian market. Consequently, Google needs to collaborate closely with tax experts and legal advisors to understand the implication of the SEP criteria and align its tax strategy with Nigerian regulations. Facebook. As part of its business model, Facebook collects data about Nigerian users to facilitate targeted advertising and personalized services. This collection and use of data for commercial purposes fall under the purview of the SEP Order, which emphasizes taxing income derived from data transmission and other user interaction within the Nigerian market. As a result, the company may come under increased tax scrutiny regarding how Facebook's data collection practices and digital interactions with Nigerian users contribute to its overall income generation in Nigeria. Consequently, Facebook may need to review financial reporting practices, evaluate tax implications of data-driven businesses' activities, and potentially adjust tax strategies to align with evolving digital taxation landscapes in Nigeria. Amazon e-commerce platform serves Nigerian customers, enabling transactions and deliveries of goods and services. As Amazon may utilize Nigerian domain name or web addresses, it could fall under the purview of the SEP rules in Nigeria, potentially subjecting it to taxation based on activities within the country. This underscores the importance of Amazon to reassess its tax position and compliance obligation, considering the implication of the SEP provisions outlined in the order. Netflix. As the subscriber base of Netflix streaming services among Nigerian audiences keeps growing, the revenue generated by Netflix from streaming digital content to Nigerian audiences fall within the scope of these provisions. This necessitates Netflix to reassess its tax position in the Nigerian market, taking into account the implication of the order. Such reassessment may involve evaluating tax liabilities, meeting new reporting requirements, and aligning tax strategies with regulatory changes in Nigeria. In conclusion, Our exploration has shed light on the compelling reasons why foreign entities, particularly tech giants that are engaged in digital transactions within Nigeria, must align with the taxation regulations stipulated in the company's income tax SEP Order 2020. It is imperative for these multinational companies to evaluate their operations against these criteria to ensure adherence to regulatory standards and mitigate potential tax liabilities effectively. By adopting this proactive stance, not only do these entities ensure compliance, but they also foster transparency and bolster the sustainability of Nigeria's rapidly evolving digital economy. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more insightful content. Also remember to watch our previous videos.